Okay, let's get started here, guys. Thank you guys for joining me on this webinar. It looks like we have 170 people here. I'm so excited to get going with this. Just as a FYI, we are recording this video, so make sure you mute your speaker. Make sure you mute your speakers, please, so nobody gets distracted. And if you have any questions, just type it in the box on your screen, and it'll pop up on my screen. And I'll answer any questions you have along with the presentation. Okay, so we're looking at about for 25 to 30 minutes here, guys. And we'll get you out. We'll go from there. Okay. So again, this is Mitch. Most of you guys know me already. I'm Eau Claire Home Buyers, and today I want to talk to you about why your note is worth more now than it will be in the future, and how you can increase the value of it instantly. So who has a land contract here? Now there's a little thumbs up with the thing you can click on your screen on your end, guys. I want you guys to click it if you have a note or land contract. We're looking at 97, 112, 113. Okay, about 147 people have a note here. Well, congratulations. If you have a note to sell, awesome. If you have a note period, but you're going to learn a ton here. I'm going to share some really cool things about the economy and why I say your note is worth more than it ever will be in the future. A lot of people are wondering that. So I'll be explaining that, and you're going to know more than most Americans when that happens. Okay, so let's get started again. Okay. So as most of you guys already know me, but who is Eau Claire Home Buyers? Why should you listen to us? We've been in the business for about 3 years now, investing in notes and real estate. We work with a group of investors who do hundreds of deals a year, and we're looking for more to do. We've been trained by the top experts in the field, such as Ron LeGrand, Speed, and Fred and Tracy. But most of all, guys, what really runs our passion for our business is we care about people, and we know we can offer something that can help many people get what they want. And that's a really cool statement to say. We can do something to help people get what they want, and that's what keeps us in business. And that's what kind of directs all of our actions and what we want to do. So today, we're bringing you a presentation that answers a lot of questions that people have when they call us. So we thought we'd just make a webinar and get everyone on our list to watch this webinar, so we can just explain this stuff, and if everyone has any questions, they can ask it, which is a really cool opportunity for you guys. So the question is, why did you sell or finance your land or property? Why most of our clients carried back a note? They wanted a quick sale of the property due to no bank qualifying. That takes a long time. The seller wanted monthly income from the note. No hassle of conventional finance, such as fees, delays, and strict guidelines they must follow. There's actually more qualified buyers when you sell or finance. Now, of course, I got to be a Debbie Downer. I have to get into the downfalls of seller financing, right? If people wanted a lump sum of cash when they sold, but they couldn't get it because usually the market doesn't demand for it. So, but you wanted a lump sum of cash. No guarantee the buyer will pay you each month. A person may need a surge of cash today and not over a period of time. Again, most sellers just want the cash now. That's what the original plan was: sell their house or sell their land or whatever you carried back a note for. The value of the dollar continues to drop, which means your payments will be worth less and less compared to purchasing power in the future. Now this is where we get into some really interesting stuff, guys. So the dollar is dropping in value. If you look at the chart here, you're going to see what the dollar is worth today. This is 2014. This chart only goes to 2005, but still the same thing. It's actually worth less even now than it was in 2005. Back in 1913, the Federal Reserve was established, and the dollar was created, and it was worth 100 pennies. Now it's only worth 4 to 6 pennies now. Okay, and there's a lot of reasons for this, but I'm just going to put this out very straight and simple for you guys. So it's a real basic understanding of this, is because it's a very complex subject, and I don't want to confuse you. I know when I first learned this about 6 years ago, I couldn't believe how much there was to learn about this. So I'm going to explain this to you guys very simply. Basically, according to this chart, guys, our dollar is dropping. That means, I want you guys to understand, this means that our purchasing power of our dollar is dropping. So you remember when a can of pop was 10 cents? Well, I'm only about 26 years old, so I don't know. even remember that, but my grandparents do. But now I bought a pop the other day for $1.87, just a bottle of pop. That's unbelievable. But that shows that our dollar is dropping. It's not with inflation. That's what inflation is. The dollar is worth less. Okay. Yeah. So this is another view of it. This kind of gives a little more detail of kind of what happens, historical events that created the dollar collapse. Basically, the biggest one I want to show you guys is the 1971, right here in the middle here, guys. In 1971, we were taking off the Bretton Woods gold exchange system. That means we were taking off the gold standard. And look what happened right after that happened. Look at how much of a decline this is. I mean, it's absolutely nuts how far our dollar has came. So your note is worth more now than it will ever be in the future, guaranteed in this current monetary system. So why is the dollar dropping? In 1971, as I just explained, President Nixon took us off the gold standard and fiat currency was born, or fake money was born. The paper dollars we use today are currencies and not money. Since our currency is not backed by gold or silver anymore, the value of the dollar has declined 96 to 97%. That's absolutely astounds me. Just a side note, but there's a question from Rachel here. She says, "Is this normal for American to make fake money?" Well, I can tell you that every civilization that has created fiat currency, the currency has always failed. I'm surprised that our government allows this, knowing that every one of them has always failed. So yeah, this. I could say it's normal because all the different ancient civilizations back in the days too, they straight off gold and silver created the fake currency, and it's all failed. So yes, I would say that is probably normal for the U.S. and well, obviously it has been normal for the U.S. because we keep creating money anyway. So most Americans have no idea where money comes from. They have no idea that the money that we have in the United States is actually loaned to us from the Federal Reserve. This means the Fed creates the money and then pours it into the monetary system with an interest rate. I got a question from Jake here. What is the Federal Reserve? To put it really simply, the Federal Reserve Bank, it's kind of called, not federal. It's got shareholders. It is not a government entity. There is no reserves. When the Federal Reserve actually writes a check, it has nothing in the bank itself. Well, it's not even a bank actually, but thirdly, but it is as if you would have nothing in your checking account. You write a check for $100 and cash it and buy whatever. That's what the Federal Reserve does when they create money. Okay, so but did you know that most of our taxes we pay in America here actually pay for the interest on all that money in circulation to the Federal Reserve? Isn't that nuts? And many Americans don't understand why we are $17 trillion in debt in the U.S. That is exactly what the system was designed to do, so we can pay interest to the Federal Reserve and make the shareholders rich. So this is our monetary base currently. Okay, this is a pretty updated chart. Well, the 2000, yeah. So this is pretty updated here, guys. This is now if you look at the shaded lines here, 3 different shaded lines. This is just a short period of time that we're looking at here. That is those are economic recessions right there. Okay. And obviously you can see this one. This one is the most recent one, 2008. Okay. Now, if you look at this is billions of dollars, and this is the years. Okay, down here. This is our monetary base. This is how much money is in circulation. Okay, so this is where we're going. This is so. In this economic collapse, we didn't really print any more money. This one we did a little spike here, a little spike here. But then in our last one, we started printing. We got the bug for printing money. We had to print money to get out of the recession. And what does that mean, guys? That means that if there's more money in circulation, that means that our dollar is worth less ultimately because there's more of it. Just like if we started, if you had $100 and I printed $1,000 into existence, well, that $100 is not going to be worth as much because now there's $1,000 and $100 in there. So it's not worth as much, and that's where inflation comes from, guys. So what really happened when we dropped up the gold standard? The Federal Reserve Bank is allowed to create as much money as they want. According to Bob, the author of the Aftershock Investor, it took 100 years to create $800 billion, and now they are creating $85 billion a month. It's about $1 trillion a year. So we're taking that 200 years and smacking that into a year. We're creating money out of nothing, and we're just printing it and printing and printing it, more of it. And all that's doing is decreasing the value of our dollar. Message from Karen here. She says, do other countries know this is happening? Yes, many other countries know this is happening. I mean, actually, China has stopped, is bypassing our dollar right now. They're only accepting gold for oil. It's absolutely nuts. But yes, the thing is about where we're at right now, as far as the base currency. The U.S. dollar is the base currency of the world, okay? So if our dollar drops, then the economy drops, the world economy drops. And that's a very bad thing. But the cool thing is, the politicians, the government will do everything in their power actually prevent that from happening, which is good. But they're still not, I guess, solving the problem in the first place. There's only so long until you can keep. I mean, there's only a certain amount of time that you can just keep printing money to solve issues until it collapses on itself. Okay. That's the theme behind this PowerPoint here, this webinar that I created for you. This is why a person's note is worth more now than it ever will be. So continue here. When we print money, we lose value of our dollar, and the dollar begins to melt. Prices rise to cover the inflation of the new money in the monetary system. Since the dollar is dropping in value and they may crash in the near future, your note is worth more now than it ever will be in the current monetary system. So what will happen in another economic collapse or crash? What would happen if a dollar was worth less than the paper is printed on? Can you guarantee that your buyer will pay you? This is the downside of seller financing that I kind of want to shed light on. Nobody likes to hear this stuff. But I guess you could say I'm building a case why it's important for you to consider selling your note, or structure the financing so it's very easy to sell your note afterward or something. If the dollar continued to increase in value, I wouldn't be having this conversation with you, and I probably wouldn't be in this business that I'm in right now. But the cool thing is I know I can help a lot of people getting them cash now because I know that I'm benefiting them because where the economy's at right now. So I'm taking advantage of the economy right now, actually. To basically show you that it really is worth more now. So if I can get you money, if I can pay you money right now for your note, man, I'm happy I can help you. Problem also is, what would happen if the buyer loses their job? What would happen if the dollar crashes and future payments are not worth as much as they once were? I mean, what if the $600 that you get every month is actually only worth $100 in purchasing power? That's a problem, guys. That's a very real problem that could actually happen. Say a gallon of milk skyrockets at $10 a gallon, and you still receive $300 a month in payment. Can you even raise the payment on your buyer? It isn't likely. You now know more than the average American, guys. So congratulations. I'm going to give you a little clap here, guys. Okay. You now see the real problem facing Americans and the whole world as a whole. So why did I just share this with you, and why are you in a unique situation? But you can gain the edge in this economy. You carried back a note, and you have leverage to sell it if you choose to. Okay, so take a minute to think about selling your note now, because your note is worth more now than it ever will be in the future. The best thing of all is we buy notes, as most of you guys already know. So the biggest question, guys, that we get when we get on a call for a consultation with a note seller is, how much cash do you need? It's kind of a fun thing to think about, actually. But that's what we base our deals on. We will structure a deal based on your needs, pretty much. So always know how much you need. If you need all of it, well, great, I'll make you an offer. If you need some of it, great, we'll do a partial purchase. I mean, I'm not going to get into all that right now. We got articles on our website for all that. But the cool thing is, figure out what you need and then bring it to us, and we'll structure a deal off that. But I kind of want to go into what have our clients used their lump sum of cash for. Many have used it for retirement. A lot of older folks, they realize, hey, I don't have enough cash, and they sell their note. If they pay taxes with them, if they find other investment opportunities to put their cash into. They pay for medical. They pay for medical care expenses. This is kind of sad to hear when I hear someone that they had a massive surgery and now they have to pay for the expense of it, so they have to sell their note. That's but we try to give them exactly what they need for that. There's a bunch of people to go on vacation or spend it on college tuition. Unexpected financial changes. Peace of mind, being free from the worry of receiving late payments or no payments at all, or having to go to foreclosure on the buyer. And many people, if you have a note and you have ever experienced accounting nightmares or IRS regulations or and paperwork hassles, you'll know exactly what I mean by people can use a lump sum of cash for all that stuff. Now, if you never experienced that, awesome. I'm not going to go into it because if you have, you know it's a very nasty thing. Ask us how we know that. We were beginners at one time, and we learned a heck of a lot since then. So how do we determine the value of your note? This is a question that we get very often, so I just want to put it in the webinar to help you guys out. You guys will know exactly how we do it. There's 5 parameters we work off of. Okay. So the side note, the better you are at providing evidence of these, and the better. The reason why we base it off these 5 parameters is we need to spend money to investigate this, and then calculate our risk for buying your note. Okay, so if you can prove all these, which I'll show a little bit more in the next slides, you're going to be able to position yourself to get the note, to get the most for your note, pretty much. Okay, so the first and obvious thing is the sales price and the value of the property or the land or whatever you got. The amount of the down payment the buyer gave you. The payer's credit. We will be pulling a credit report, and we'll be explaining what we're looking for also in the next couple slides. Seasoning, length of time they have paid you. We like to see proof of how long they have paid you and if they pay you accurately and on time and everything else that goes with it. And then in terms of the note, the interest rate and the payments. And now I'm not going to go into every single one of these, guys. I'm going to, if you're interested in selling and then getting a cash payment from us, give us a call and we'll kind of go through this with you and tell you, because each individual note is very different. That's why we have unlimited ways to structure deals. I mean, it's exciting to do what we do because you never know what's going to pop up. Okay, but these are the 5 parameters that we use to give a fair market value to your note. Okay, so how can you increase the value of your note? This is a question we get all the time too. So hey, what do you know? We put it in here. Okay, let's go through each one of these. A down payment. The more a buyer has invested in the property, the less likely they are to quit paying, go into foreclosure, or just walk away from the property. Ideally, a seller would like to see 30% equity or down payment, but realistically, it will be in the range of 10-20%. If it's much less than 10%, investors will severely cut the investment of value ratio. This is one thing we grade your note on. A limit to only a partial purchase, which means we only buy part of your note, not all of it, or decline altogether, depending on the buyer's credit. So, we'll put this very simply, guys. If the buyer gave you a good down payment, more than 10%, great. The less credit they have, the more down payment you receive. If the buyer gave you a low down payment, we would have to really investigate their credit, and that would, and most investors do that, but there's a good chance that it will be declined from us buying it because say the credit of the buyer comes back low and they put down a low down payment, there's a lot of risk on our part. Okay, what you notice here is the less risk we have, the more we can pay you. The more risk, it'll be less we can pay you. Okay, so it's all about how you structure the note from the actual beginning of the note. Okay, so the credit rating of the buyer. The credit report reflects the buyer's past payment habits, makes it a good indicator of how timely they will be to pay the seller. With a subprime mortgage crisis, it's better to keep the buyer's credit score above 625 with the ideal range of 675 or higher. Now, I have to admit, a lot of sellers don't pull the buyer's credit before they sell or finance, which is very hard, which is actually a bad idea. If you are one of these people on the call and you didn't, you should have. There's still ways we can still buy your note. We'll pull the credit, but you should have did that at the beginning just to make sure you're protected. And a lot of these things, guys, you got to be protected. When you sold your house or your land or whatever and carried back a note, and the only way for you to make money is for them is for the buyer to pay you. So you want to make sure you are protecting yourself the best you possibly can. Interest rate. Since you're carrying back a note, guys, the buyer does not have to use a bank, which means you should charge a higher interest rate of 8 to 10%, okay? Or normal, you should be charged with 2 to 4% higher than a bank interest rate, okay? So if you're charging that, great. If you're not, we can still work with you. It'll just be a little different. We'll be structuring a deal a tad differently. Term, interest only payments are out. The best scenario is to require monthly amortization payments with a balloon payment. A payment schedule based on a 360-month amortization will keep the payment affordable for the buyer, while a 5 to 7 year balloon will shorten the term and minimize discount effects to a seller that comes from the time value of money. Now, that may sound a little complicated, but I guess this is what we're looking for. And again, there's a million situations, a million types of notes out there, I guess. Or types, there are so many different types of notes out there, and we can structure in almost an unlimited amount of ways. So not every note needs to fit this criteria, but this is what's going to increase the value of your note if you have to actually structure it this way. Now, if you're an investor right now on this call, or say you have another house, you're thinking about solar financing, I'm so glad you're here, because then you can actually take notes on all this, and I will be sending you this recording. If you're on the webinar right now, this live webinar, I'll be sending you a recording of this, okay? If you're actually watching this at a later date after this recording, as a recording, you can just basically go back in this video and make sure you write down all these notes here, because if you are looking to sell or finance your property, what note investors are looking for, okay? So you can kind of structure it based on this, okay? So this I really want to go through the payment collection and documentation. There's many people who came to us to buy notes, but they couldn't prove that the buyers ever paid. That's very hard for us to buy a note because there's no proof that the buyers ever paid you. And then this is kind of a scary thing in this industry because we get a lot of people coming to us that kind of did word of mouth seller financing. We shook hands and you should pay me every month, and it's a very unprotected way of doing it. We just had a guy the other day call us, and it was not closed with an attorney. We close all of our deals with an attorney, and you should too if you haven't. This guy came to us, he wanted to sell his note. The guy has not closed with an attorney yet, and we can't buy his note if it's not closed with an attorney. If it's not legit, we can't buy his note. But he didn't want to pay for the fees and stuff of that. But I tried to explain to him that he's not protected right now. He is liable for a lot, and he's not protected, and a lot of things can go wrong. So I convinced him to close, so I'll be hearing back from him later on this week about that. But this is very important, okay? Collecting the payments and documentation. So number one, place your notes and other original documents in a safely deposit box. Keep it safe, guys. A lot of people, if you can't provide this, we can't actually buy your note. We need to see the note. We need to have you actually fax over to us a copy of it so we can see what it says on it, okay? So make sure you keep it safe. A lot of liability issues with this, guys. Make sure that it's in a safety deposit box or somewhere extremely safe, okay? Make a copy of each check or money order received. Accepting cash is not recommended as the lack of paper trail makes it hard to verify. Again, we need to verify all this, guys, before we buy your note or even make you an offer, because we need to make sure that there's a lower risk. Again, if there's lower risk on our part, the more we can pay you, okay? We keep a copy of the bank record of deposits for the payments received. We got to see that this payment was put into your account as a payment, okay? Not as just a friend gave you a check to put in there and then you spent it, and it's a mess to verify that. Create a ledger reflecting the date and amount of payments received. To keep it this, so this will help you keep track of all this too, and you'll be always up to date on what's happening. In Excel too, you can calculate the amount of interest paid, the principal paid, and any late fees, and the resulting principal balance. An amortization schedule or calculator can be helpful with this as well. So once the calculator recorded in a ledger, send out an annual statement to the buyer or payer along with the IRS 1098 mortgage interest statement. If you don't know how to do this, that's why we recommend actually getting a third party to do this for you. It makes things a lot easier, and it keeps things legit, and it will keep track of things all for you. So you'll just be able to call up your accountant and say, hey, or the payment collector, whatever you choose, and say, hey, I want you to send this to Eau home buyers. They need to verify, and go from there if you want to sell your note. Verify the real estate taxes and property insurance are being kept current. Ask us how we know that. Consider establishing a tax and insurance escrow wherein the buyer pays 1/12 of the annual amount into the reserve each month. And you want to send collection letters as necessary for late payments, of course. And you want to make copies of those and fax them to us if you want to sell. So the funnest part of all, guys, how do you sell your note to us? Well, it's simple, and we handle everything. I had to put this picture of this lady on here because I thought it astounded me when I saw it. So obviously she's very happy that our process is very simple and we handle everything. So we need to gather the documentation first. Make sure you have the settlement statement, the mortgage note, deed of trust, real estate contract, etc., the promissory note, and the payment record. And then give us a call, 715-598-2626, and we'll take it from there. We'll basically request you to fax that over to us if you're interested in selling it. We will need that preliminary stuff for us to make you an offer. So this is all you got to do, guys. Extremely simple. We want to streamline this process so people get their money fast. So call us 715-598-2626 for a free, no obligation note appraisal. Again, guys, it's absolutely no obligation. If you want to sell your note, we'll make you an offer. If you accept it, great. If you don't accept it, that's absolutely fine too. Absolutely no obligation. I hope you feel comfortable calling us based on actually getting to know me in this webinar. I'm pretty laid back. I get excited about this stuff actually. Yeah, just give us a call if you have any questions. Let us know. So, leaving you with one thing here: no matter where you are today, you have the power to change where you are tomorrow by the decisions you make. So make good ones, guys. And so I appreciate you guys for joining me. Thank you so much, and have a wonderful day.